Hello, everyone, and welcome to today's teleconference call, which is exclusively for Jim Wood's subscribers, as well as a few other people from Asset Strategies. Today's topic is a golden vision for 2020. My name is Roger Michalski. I'm the publisher at Eagle Financial Publications, and we've been doing these teleconferences for many years now. And one thing I noticed was the most asked question. Doesn't matter what's going on in the markets, when the market's in a full bull market, bear market, it doesn't matter. The number one question from the audience is always gold. What is gold going to do? What is gold going to do? So we were like, hey, why don't we do one of these teleconferences, do a little different, and do 100% on gold? So that's why we decided to have a call centered around just gold today. So with us today we have Jim Woods. Jim is the editor of Successful Investing, Bullseye Stock Trader, as well as Intelligence Report. Jim, how are you doing today?
I'm doing fantastic. It's excellent to be here, and everyone on this call is in for a real treat when and you'll find out why shortly with my friend Rich. So thanks everyone for coming, and let's get into it.
Okay, and as Jim just mentioned, we have another person on the line today, a special outside expert on gold, Rich Checkan from Asset Strategies. I've known Rich for a lot of years now, and Jim knows him well as well. And I really do, I 100% believe this. I consider him the best expert on gold and precious metal in the entire country. And he's one of the most honest people and knowledgeable people I know on this subject. So when we decided that we had to have this teleforum just on gold, I had to call Rich and invite him along as well. So Rich, welcome to your first teleforum with us.
I'm happy to be here. Thanks, Roger. Thanks, Jim. And I got to tell you, you set that bar pretty darn high, Roger.
No pressure.
But that's okay.
No
we'll get over it.
All right. So for those of you who have been on these calls before, and we have a bunch of people who probably have not been on one of these calls, one of our favorite things to do is get your opinion, and we do that by poll questions. We're going to have 2 poll questions today, and they're very easy. I'm going to ask a question and give you 4 or 5 answers, and you're going to respond by just hitting 1, 2, 3, 4, or 5 on your touchdown pad to put your vote in. So the first question is, what percentage of your portfolio do you have in gold? Press 1 if you don't have any gold. Press 2 if you're between 1 and 10% of your portfolio. Press 3 if it's 11 to 20%. Press 4 if it's 21 to 40%. Or press 5 if I'm a true gold bug and I have more than 40%. So again, what percentage of your portfolio do you have in gold? 1, you don't have any. 2, you have 1 to 10%. 3, 11 to 20%. 4, 21 to 40%. Or 5 if you're more than 40%. So we'll get back to the poll question here in just a couple of minutes. While everyone's voting, let me give you a little overview of what we're going to cover in today's call. So we're going to talk about why you should have gold in your portfolio, and perhaps more importantly, how much gold should you have. We're going to talk about the different ways you can buy gold and precious metals. We're going to get both Jim and Rich's outlook for gold and other precious metals for 2020. And we have a very special offer that's only available to Eagle subscribers at the end of this call. It's something I arranged with Rich, and I think you're going to really like it, and you're not going to want to miss it. So stay tuned to the very end to find out what that special deal is. And finally, we're going to have another interactive poll a little bit later. And another session that we do that is our favorites as well is Q&A sessions, where you can directly ask Jim or Rich a question. Now, if you'd like to ask them a question, hit *3. You'll get into our queue. One of my colleagues will get your question and where you're from, get you right back on the call, and then we'll get to some calls. We also have some write-in questions, but we'll take some live questions and some write-in questions a couple times throughout the call. So again, you can hit *3 to get into the queue. All right, so Jim, you wanted to mention a couple of reasons. I highlighted a couple of things that you wanted to discuss a little bit on why you thought Rich needed to be on this call.
Yeah, well, thank you, Rich. Thank you, Roger. One of the things that I'm asked, as you are as well, is a lot about gold. Now, I advocate holding gold in our portfolios and successful investing and also intelligence report as part of our protection portfolio. But we do it in a little bit more kind of general way than Rich does. We do it through exchange traded funds, and sometimes we'll do it through gold mining stocks, individual gold mining stocks. And this is a great way to get exposure to gold and precious metals, but in a much different way, as Rich is going to tell you about. And there are pros and cons to owning gold in the way we own it in the services, but it's a lot easier. I mean, it's hard for me to tell someone how to buy gold in a physical way because there's so many different ways and so many different things to do. Moreover, I am not an expert on gold and precious metals, coins, and the physical part of these things. Now, there's plenty of things that I consider myself an expert in, and I'm proud of that, but this is one thing that I am not an expert in. So rather than try to become some kind of an expert that I'm not, I wanted to make sure that my subscribers knew and heard from a person who really is an expert at this stuff. You know, I've likened it to like learning how to play golf with Tiger Woods or learning how to, do physics with Stephen Hawking. I mean, this is the kind of mini expert seminar you're going to get. So that's why I wanted Rich on here. And plus, like you mentioned earlier, Roger, Rich is one of the most honest guys and most competent men and most excellent men I know. So I think that you're in for a treat, and this is one of the reasons why I wanted to bring in his expertise for us.
All right. Well, so Rich, it looks like Jim even raised the bar higher than I did. So
no pressure.
No pressure at all. So Rich, so why do you need gold as part of your portfolio?
Well, first off, just to get back to what Jim was saying, and the way we typically sell it, I'm not a securities broker, all right? So we sell it differently than mining stocks or ETFs, et cetera. There's nothing wrong with having that in your portfolio. Obviously, it's another way to participate in the sector, and it's critical, especially if you're making a portfolio recommendation, to have something that people can track with a ticker symbol, right, and to be able to move in and out quickly of their positions. In fact, ETFs, exchange-traded funds, GLD, SLV, and the like, are very common among institutional buyers and so forth for that very reason. It's something easy for them to get in and out of quickly. If you can, I prefer owning some physical precious metal in your portfolio as well. And the number one reason, if you ask people, why would you own gold? It's typically for the uncertainties of this world. It could be a black swan event like, I don't know, coronavirus and what that might do to economies around the world. It could be just because of political or geopolitical uncertainty, unrest, social unrest. It could be any number of things that could trigger a flow of funds to safe haven assets, and gold is absolutely one of them. The dollar is considered safe haven. Japanese yen, Swiss franc, and gold are probably your primary safe haven assets. That's where people go to when they want to hunker down, if you will. I personally think that every portfolio ought to have a small allocation of precious metals, physical precious metals, for what I call wealth insurance. Okay, and this is typically somewhere around no more than 10% of investable assets allocated to primarily gold, but maybe also a little bit to a divisible form of silver. And the purpose is to store purchasing power for a potential financial crisis in a very, very liquid form, but it's a crisis you hope you never have. So it's a buy and hold and never sell unless something untoward happens financially and you need to rise up and meet that financial challenge. And if that's the case, you sell that metal immediately, meet the challenge, and then over time replenish your wealth insurance to be ready for the next rainy day. So that's, for me, the number one reason. It's why our firm has sold gold primarily since 1982. It's to have that fallback position, if you will. There's another reason to buy gold and silver and platinum and palladium, and that's for profit. But that's not an all-the-time thing. For me, wealth insurance is all the time. You never get rid of it, and if you pass away and you never need it, you give it on to your heirs. There are times when the market is coming back from a correction and a new bull market in metals is starting, where you can actually make some significant profits over a period of time. Usually about a decade is how long those bull markets run. And there is a chance to make some profit. And, you know, I usually put a small amount, in addition to the wealth insurance, into for-profit purchases of gold, silver, platinum, and palladium at those times, and I treat it very differently. I rebalance that. So if gold doubles, I sell half of it as I rebalance my portfolio, and I manage that. So even though I'm a gold bug, at the worst case, I'm looking at maybe 25% of my portfolio in metals, and that's in the very best circumstances for growth in the metals complex.
All right, I want to remind everybody to ask Jim and Rich a question. Hit *3, and you can get in our queue to be live on the air with them later. Let's go to the poll question and see what kind of results we have and see what Jim and Rich think about this. So the question again was, what percentage of your portfolio do you have in gold? 52% of the people said they have between 1 and 10%. 35% said they don't have any gold in their portfolio. 9% had 11 to 20%. Only 4% had 21 to 40%, and nobody, 0% had more than 40. We did have some votes, but not enough to even get to 1%. So 1 to 10% was the big winner, followed by none. Jim, what do you think of those results, and what do you think the answer should probably be?
Well, I think that my subscribers have done me well on this poll, because the 10% is usually about what I recommend in the newsletters. It's slightly less in the intelligence report newsletter, but the percentages that's pretty good. I mean, the 10%, up to 10% is about right, I think. 11 to 20%, depending on the time that you're talking about. Maybe you could an argument could be made during times of turmoil that you would want more gold, up to about 20%. But those who have zero gold, that is to me a little bit of a danger zone. You need to have some gold or some exposure to that segment as a part of a well-rounded portfolio. Now, you don't always want to have that kind of exposure. I mean, maybe there's some certain times when you want to be all cash, or you want to be all equities during extreme periods, but I don't think that that's very often situation. I think the 1 to 10% with an eye toward that 10% figure is appropriate for most investors.
All right, Rich, what do you think?
Yeah, I'm actually really glad to see those numbers come up. And just so you know, when we say 10%, and understand, everybody's situation is different. Your goals, your objectives are different at different points in your life versus different people in your life, et cetera. So there's no right or wrong answer. It's the right answer for you, for number one. But for number two, the reason we tend to throw out that 10% number for wealth insurance, it comes not from throwing spaghetti at the wall and see if it's al dente, or throwing a dart at a dartboard. We came up with the number because there have been some very scholarly studies that are done that identified the sweet spot, if you will. So somewhere between 8 and 10% of gold in a portfolio tends to, regardless of the currency, regardless of the stock bond mix of the rest of the portfolio, it tends to increase your performance over all of your portfolio and decrease risk. Okay? If you hold less than that, you don't get the same benefit. If you hold more than that, sorry for the guys holding over 40%, you don't get the same benefit from that. Okay, that 10% is really a sweet spot, and I personally only tweak that when I can see everything aligning where we're coming off the bottoms of the metals prices and we see a bull market forming. That's where I like to get involved. As Bernard Baruch says, I don't care about the first 20% of appreciation or the last 20%. I just want my 60% in the middle. And when I see that forming, I've been in this industry for 26 years now, I try to take advantage of that and get some growth out of my metals as well. So there was a question, if you want me to answer it, from Suzanne. I can touch on it right now. We'll get to it later.
A little bit. We'll get to the Q&A. Yep.
All right.
All right. So, 10% seems to be a consensus here that's about what you'd want, and most of our people were there. Not quite everybody. So I want to remind you to ask Jim or Rich a question. You can hit *3 to be put into our queue, and we'll have Q&A here in just a couple of minutes. But let's go to the next poll question. This one has 4 answers, and this question is, which precious metal will perform the best this year? Press 1 if you think it'll be gold. Press 2 if you think it'll be silver. Press 3 if you think it'll be platinum. And press 4 if you think it'll be palladium. So again, which precious metal will perform the best this year? Press 1 for gold, 2 for silver, 3 for platinum, and 4 for palladium. And again, we'll get back to that question and see what everybody thought and get Jim and Rich's response to that in just a few minutes. But now let's go ahead and we'll take a couple of questions here. I'm going to start with, let's go live. Let's Rich is just going to answer Suzanne's number. So Suzanne, you're live on the air. What's your question for Rich and Jim?
The question was, what is the recommendation or the analysis of pre-1933 coins, graded coins, versus just American Eagles or maple bullion?
Rich, you want me to go first? Do you want to take a shot at it, Jim?
Yeah, no, I mean, this is the kind of question that is perfectly in Rich's wheelhouse, so yeah. I will defer to
I've got an answer, and it's a great question. It's a great question, Suzanne, because a lot of people have that confusion out there, and most metals dealers will do both, right? So you get different offers from them, et cetera, and you're like, okay, what am I supposed to be doing here? So that's a fantastic question. I personally, when I'm buying precious metals to fill an allocation in my portfolio, it is almost primarily bullion. And the reason for that is you can buy bullion with the lowest margins available. Okay, so you don't have a lot of cost in order to participate in gold, silver, platinum, palladium, bullion markets. The pre-1933 U.S. gold, early U.S. gold, if you will, I have in my portfolio as well. I think it's a fantastic addition, but it's different from the allocations that I mentioned, the 10 or the 10 to 15% extra in times of growth. I usually allocate no more than another 5% to pre-1933 U.S. gold. And the reason for that is you can get an accelerated appreciation as you benefit from both the precious metals price rising and the perceived rarity or desirability by collectors of the coins you're purchasing. So I do like having them in my portfolio, but I don't mix them with the bullion. I usually put another 5, tops 10% in certain markets to that early gold for the increased appreciation potential. Now the trick there is to buy the right material and to be guided by an expert in what you purchase. There's certain things that collectors love. They love sets. They love certain eras in our history. They love big gold versus small gold, if you will. So the more levels of desirability or levels of collectedness you can put into your collection, you make it more desirable and therefore increase your chances of appreciation going forward. But it's a different allocation to me.
All right, thank you so much,
Suzanne,
for your question. Let's go to one of the write-in questions, and I'll remind everybody to hit *3 if you'd like to get on the air and ask a question. One of the write-in questions, and this is probably a little bit more up Jim's alley, so we'll share the wealth here. The question is, what is your opinion of using Franco-Nevada, which is ticker symbol F as in Frank, N as in Nancy, V as in Victor, as a substitute or in addition to the various gold investments available that you might use?
Yeah, that's an excellent question, and as many subscribers to Successful Investing know, we had a tremendous win in our position in another mining stock called Kirkland Lake Gold, and we made, I think, about 80-something% in that position in just the one stock in about a year's time or so. So that was one of our biggest wins in our aggressive portfolio, in the prime movers portfolio that we have. And one of the reasons why is because, in addition to being exposed to the segment at a good time, it was also an extremely well-run company. And I consider FNV the same kind of well-run company. And the stock is doing very well in the last year or so. It's actually doubled the value of my favorite, Kirkland Lake. So I think it's up about 50%, 46%, something like that, off memory. And that's an excellent way of getting supplementary exposure to the gold and gold mining areas. If you want to cherry pick the best of the best stocks within certain segments, like within the ETFs, like a GDX, and the other one we have is called RANG. That's a good way to do it if you're comfortable with owning those individual stocks. But keep in mind, it's going to be a little bit of an outside your kind of overall wealth protection plan to own that. It's more of your equities kind of allocation. What Rich and his firm does is provide that additional security layer with a physical gold. And that's why I think you could use both as a complement to each other, and that's what I would recommend you do.
Can I add to that? Because I think that's a fantastic point. Yeah, I think that's a fantastic point, Jim. You know, I own equities or resource equities in my portfolio as well, and they can give you leveraged returns. You made a good point. It's an equities allocation, right? So that it comes out of that portion of your portfolio that's triggered for equities. There are other variables that come in. So you need someone like Jim who's going to research the heck out of a stock and make some suggestions. Franco-Nevada and other, what do you call it? I can't think of the word now, but the type of stocks, royalty companies, are very, very popular and rightly so for the returns they're spewing with minimal risk. But you bring in other factors. You have to worry about the management. You have to worry about the environmental issues. You have to worry about licensing and permitting, et cetera, et cetera. So you need somebody to help guide you through that maze. But it can be very, very rewarding if you have the right guide.
Okay, let's go to another write-in question. This one says, what factors need to come together in 2020 to raise the price of gold from today's price, and what is a reasonable expectation for the gold price this year? So, Rich, why don't we start with you?
Okay. All right. I think there's any number of things out there that could trigger the gold price moving higher, but I will caveat it all by saying I don't see anything stopping it. Last June, and we called this, if you've read the piece that Jim included early last year, we talked about halfway through the year we would see some sort of a breakout is what we anticipated, and I'll be darned if in May, June, we didn't see that breakout in gold. It got through the 1,500 level, through 1,550, all the way up, or 1,350 level all the way to 1,550 before it paused and took a breath. So the breakout absolutely occurred. This bull market is underway. They tend to take a while. There'll be retracements and many corrections along the way, but they tend to last about a decade. And the returns tend to be fairly significant. Last bull market, gold went up 650% in 10 years. Silver went up 1,000% in 10 years. Not bad. No guarantee that's going to happen again, but similar things happened 2 bull markets ago, and that ended in 1980. So I don't think you're going to stop it. Things that could accelerate the process of gold moving forward could be not being able to get the coronavirus under control and the impact it'll have on the global economy and the slowing, which everybody was worried about. I still don't know that a recession is coming anytime soon. I think that seems to be the consensus, but you have massive slowdown globally in the economy, and that could trigger it. Okay, trade wars obviously out there. Any sort of dysfunction continuing in Washington D.C. and elsewhere can trigger it. I think the biggest thing out there though is the dollar and greed versus fear. Right, so I think there's still people out there who wanted to retire back in 2008 that couldn't because they lost 40 to 50% of their portfolio in the crisis. And they've been furiously investing ever since, trying to build that back up to the point where they could retire. And I think many people still have not. So that eventually, that greed to get back to where they were will eventually give way to fear of holding on to what they got and not wanting to lose it again. And I think you'll start seeing people bank their profits in precious metals. So that'll be part of it. But the bigger thing is the dollar. As the dollar goes down, gold is going to go up in price. It's going to take more dollars to buy that ounce of gold or that ounce of silver. We're about 8 years into a dollar bull market right now, and they tend to last 7 to 9 years. So like the lengthy stock bull market, the dollar bull market is long in the tooth, so to speak. And I think if you see the dollar dip below 95 and hold below 95 on the U.S. dollar index, I think if you already don't have your gold, you want to start buying it at that point pretty quickly.
Okay, so you think we're early in the, so baseball game, we're kind of in the first inning here of a new gold bull market. Jim, what do you think?
Yeah, I think, we might be in the second or third inning, and I think that's why we need to really get in this game. The reason why I say that is because I'd say the first inning was around like the end of 2018 or so, beginning of 2019, because we had a really good run up in gold in the entirety of 2019, which is counterintuitive because the equity market also had, as we all know, had a beautiful year, and that was up. So, it used to be that when equities were up, bonds and gold were down, but that's just not the case anymore. Now, as far as what Rich said about the dollar, I totally agree with that. The dollar, even though gold prices have kind of, bucked the dollar trend, so to speak, a little bit in the last, say year or so, because the dollar has just kind of trended higher steadily. It wants the way I see it, the dollar wants to go down, but the problem is you have central banks that keep putting easy money out there, and that is going to keep the value of the dollar down. And not just our central bank, but central banks around the world, the ECB, and all these different central banks are also keeping their monetary policy easy. So that's keeping the relative currencies down, like the euro and the pound and the yen. That's keeping those currencies down as well. And when you're looking at the value of a dollar, you're looking at it as in relation to other currencies. It's not just a value like objective value. It's a value that is like the U.S. dollar index that Rich mentioned is a basket of security or basket of currencies versus the U.S. dollar. The U.S. dollar is still king. It still kind of rules the roost. But if all the other securities are languishing, then the dollar value is going to be held up almost artificially. So we haven't had that trigger yet in the dollar to send it down lower. But if global growth ramps up, and if some of these, this Brexit thing kind of is now a done deal, if that can lift, like say the value of the pound or the value of the euro, we might see the value of the dollar start to wobble, and that will actually be good for gold, but it'll also be good for corporate earnings around the world because U.S. multinationals like a lower dollar. I think we can sell at better prices. So I'm kind of secretly hoping for a dollar pullback here that can lift gold and equities.
Yeah, I'll just add to that. I'm a weird gold bug, weird gold dealer in that I like to buy my 10% in gold, and I'm happy when it goes down. That means 90% of my portfolio is doing just fine. So, just keep it all in perspective. A diversified portfolio gives you the protection. Not having all your assets in any one country, any one currency, or any one asset class or investment is important. That's where you get protection. It'll minimize a little bit of your upside, but it'll certainly protect you from the downside as well.
All right, so I want to remind everybody to hit *3 if you'd like to ask a question and be on the air in a few minutes. Let's go back to the last poll question. So the poll question was, which precious metals will perform the best this year? 46% said silver, 26% said gold, 19% said palladium, and 9% said platinum. So silver, a clear winner, with gold being kind of second place. Rich, put your little crystal ball out and your guru hat on, and what do you think is going to be the best performer this year?
I've been asked that question a few times thus far this year, and I still think it's silver. So I tend to agree with your poll. I like silver for a couple reasons. One, it's been lagging gold, as it tends to do. So if you can kind of picture this, there's a thing called the gold-silver ratio, right? It's the number of ounces of silver it takes to buy 1 ounce of gold, and we track that. And it's cyclical. Typically, the low point, the lowest number of ounces to buy silver, it usually triggers or signals that we're at the high end of prices for gold and silver, is around 35 to 50 to 1. The low end, signaling the bottom in precious metals prices, and therefore time to turn to a new bull market, is usually somewhere around 80. That's the magic number. Well, that magic number was initially touched in December 2015, and we've been between 80 and 90 for the most part ever since. So what happens is when gold is your leader, it starts moving up in price first, establishes the trend like it did in May and June of last year. Silver follows, but it's a smaller capitalized market. So the same amount of dollars going in the silver market have a bigger impact. It's like throwing a rock into a puddle versus a lake, right? Gold is the lake, silver is your puddle. When you start putting money into the silver market, it starts to accelerate to the upside. And it tends to, by the end of the bull market, I mentioned last bull market, 650% appreciation for gold, 1,000 for silver. That's what tends to happen in virtually every bull market. So silver will go higher highs, and then when gold turns and starts heading back south again on the classic correction, 40-50% like it did last time, silver outpaces it and goes deeper to the downside. So silver's got your best profit potential, but it always lags gold. Gold establishes the trend first, and we are still in the 80s, high 80s on the gold-silver ratio. It's a great time to be buying silver for profit. And you hold on to it until that ratio comes back down to around 35 to 50, rebalancing all along the way. So I still think silver is the best potential. I think it'll do well this year, whether the economy performs well or not. If it doesn't do well, it will benefit from safe haven flows just like gold. If it, if the economy performs well, then silver is going to get the benefit of industrial demand. So I think silver is going to have it going its way in either case this year. I still think gold's going to do well and continue appreciating. I have a tough time betting against palladium. It's been the best performing precious metal for like 7 straight years now, and there are real supply issues with that metal. But eventually I think platinum is going to have to be substituted because of the lofty prices of palladium. I still like silver best this year.
All right, Jim, you wanted to talk about another metal. Do you want to jump in on that?
Yeah, well, one of the, first of all, I agree with that analysis on silver. And just putting my chart hat on, I see when I look at the chart, when I look at overlays on gold and silver, you can definitely see the volatility to the upside and to the downside, which is more in silver. You get more peaks and valleys in silver. So if you can catch that peak coming up, then that's why Rich recommends that for profit. Silver is a profit trade. Now, the one metal that I track quite a bit, and my subscribers know this because I write about it quite a bit, is copper. Now, copper is not technically a precious metal, of course, but it is an industrial metal, and we call it Dr. Copper because we say copper has a PhD in the global economy. So if you see copper prices falling, that is a leading indicator for risk assets in the future. So right now, the market in copper is just collapsed, and now there's an exogenous reason, and it's because of the coronavirus. China is the number one consumer of copper. So when a country is basically on lockdown for a couple of weeks and for a couple of weeks more, at least in the short future, if not longer, then you're going to see some demand for copper fall. You saw demand for oil fall big time as well, and oil is now in a bear market. Copper is plunging, and there's a reason. Obviously, there's an acute reason for that with the coronavirus situation. But even before the coronavirus, we started seeing copper pull back, and that was due to global economic fears. I wouldn't say that it's going to be a recession per se. As a matter of fact, we got kind of a get-out-of-jail-free card with this coronavirus too, because we can all, if you're going to see a lot of companies coming up that have earnings, and they're going to say, well, yeah, we had depressed earnings, but it was because of the coronavirus, and that's a legitimate reason for many companies, especially the ones that do a lot of business in China. So look for that in the months ahead. But I just wanted to make sure everyone knows that copper is a metal that I track, but it's not a kind of metal that you need to be putting in your portfolio or worried about owning it. I use that as a global economic indicator, and because it's been very accurate. Now, hopefully this time it's not accurate because of the coronavirus. So if you see copper tumbling, just remain calm. There's a direct reason for it and a direct explanation.
All right, terrific. So we're going to take some Q&A here in just a couple of minutes. So again, you can hit *3 to get into our queue to ask Rich and Jim a question. But before we do that, I mentioned this earlier. Rich, you and I discussed this, and Jim as well, about putting together a really special offer to expose people to silver and gold, and you put together really nice package offer that's exclusively for our Eagle readers. So tell us a little bit about that.
Yeah, I'm really excited about this, and Jim knows I've been looking forward to this call for a while, and I really want to do something special for the Eagle readers. So getting back to my thought of that, 10% for wealth insurance, and this is a great buy for anybody who want to add precious metals to their portfolios. But I like having a mix of gold and silver. So we have proof Eagles that are at incredible prices right now, and let me explain. I told Suzanne earlier I don't like paying high premiums when I'm buying bullion. So typically, I don't like proof coins, modern issue proof coins. I hate them. The premiums are sky high. When you buy them, they go through extra strikes, so that they're incredible detail. They're highly polished. They come with certificates of authenticity from the mint in these beautiful boxes and everything else, but you don't get any more gold. And you pay exorbitant premiums to the mint to buy proof Eagles, typically. And then, when you sell them back, you either get melt or a little bit above melt, and you give away all that premium. Unless you're a collector, I don't like them. Unless, what we've been able to arrange is we've been able to get proof Eagles for anybody that's willing to buy them cheaper than backdated gold Eagle bullion coins. So for 1 to 9 gold Eagles, we'll offer them at $65 over spot. For 10 to 19 gold Eagles, we'd offer them at $55 over spot. For 40 or for 20 plus coins, proof eagles, we'd get them at $45 over spot, and that compares to bullion backdated gold eagles, 1 to 9 coins, $106. 10 to 19 coins, $93. 20 plus coins, $85. In every case, it's about 40 to 45% cheaper premium for proof gold eagles. I'm a buyer with both hands there. So if you can buy as little as 1 coin. You do pay shipping on 1 to 9 coins, but anything over 10 coins, 10 or more, we'll throw in free shipping, handling, and insurance. In addition, we've been able to secure a special deal for your readers and listeners for junk silver. So this is pre-1965 U.S. 90% silver, quarters, dimes, and half dollars. Half dollars usually sell at a premium. And I will tell you that junk silver is great for divisibility. It's one of my absolute first choices for buying silver if the premiums are low. And I call low 4 to 6%. Okay? We're able to get those for your listeners today, even half dollars, 2% over spot. Okay, incredible deal. If you buy $500 face value, so that'd be, for half dollars, that'd be, God, my math, 100 half dollars. Did I get that right? But for 500 face value, you get free shipping as well. So great deals. In addition, anybody that calls in, we're going to get you subscribed to our free newsletter, once a month information line and twice weekly, always something interesting. We talk about our world, precious metals. It's our way of kind of keeping in touch and letting you know where the trends are. And for anybody that wants, because it is a personal thing for your allocations, anybody that wants, just give a call, ask for Rich. You get a personal consultation with me. Not while I'm on this call, mind you, but I'll call you back at your convenience, whatever. Happy to talk with you and answer any questions you might have.
Yeah, well, this is an absolutely terrific deal. Yeah, it's an absolutely terrific deal, Rich. And, that's one of the things I've always liked about your organization is that there's a lot of coin dealers that are just ripping people off, to be quite honest. They rip people off. They have these high premiums, and you want to build long-term relationships with your customers and be fair and honest with them. And the margins you have, nobody has as small margins as you guys have. It's amazing. So, and then they did even better for the special deal today for Eagle subscribers. So if you want to take advantage of this offer, I encourage you to do so now. You can hit *0. And you'll be transferred right over to Asset Strategies, and you can place your order, or you can write down this number and give it a call right after this, right after we're done here. The number is 800-831-0007. Again, you can hit *0 now, or call 800-831-0007, and be sure to mention that you heard Rich on the Eagle call and you want the Eagle special deal, because otherwise you don't get this special deal. This is a really, really good deal, so I really appreciate Rich you doing that for our subscribers, and encourage everybody to hit *0 now. So we're going to talk about some different ways to buy gold here in just a minute, but first let's go to some other questions, and let's go to James from New York. James, you're on the air. What's your question? James from New York, are you there?
Yes.
Yeah, so you're live on the air. What's your question for Jim and Rich?
My question is about silver stocks and the silver ETF, SLV, the CDE, Pan American Silver, and any other silver stocks recommended, like maybe WPM.
Thank you. Yeah, I can handle that one. Great question, and thank you for asking, James. Well, my favorite of that group is Pan American Silver. Its ticker symbol is PAAS. Now, some of my readers and some people on this call, I think probably are subscribers to my Fast Money Alert, the one that I do with Dr. Skousen, and that is one of our holdings, Pan American Silver. It's a British Columbia-based mining company. They have they're involved in the exploration development of silver mines. They produced roughly like 22 million ounces of silver in the most recent year. And the companies, they're in Central America, South America. They also have mining operations that include other metals like zinc, lead, copper, and even gold. The reason we have it in the Fast Money Alert is because the stock has just been shooting up crazy in the last, say, 6 months. I think we're up about 25% since late August, since early September, I believe. So we've had a real good winter with that, and then our options position in that has been tremendous as well. So that is my favorite in that group. The other, I mean, if you're talking about owning the ETF, it's SIL, or it's SIL is the mining ETF, which is done very well. The SLV is, of course, the physical metal silver, and that's the ETF way to get exposure to that. SIL would probably be the way to go in terms of the equity allocation, but if you're looking at it more from a wealth preservation or a capital appreciation, and you want to own the silver, the physical silver, then that's where you want to turn to the junk silver. I don't like calling it junk because it's silver, but I know that's the term of it. But it's not junk; it's good silver. It's a way to make money.
Well,
it's like
it's
bonds,
funny that they call it junk silver. A lot of people don't realize that it's called junk silver because the old coins are not in good enough shape. They've been worn over time, in cash drawers, people's pockets, going through coin counters or what have you. So they're not collectibles, right? But they're still 90% silver in content.
Right.
And when you melt down 100 face, you get 71.5 troy ounces of silver invariably. They used to sell on the COMEX in bags, 1,000 face bags. They just didn't have enough of them, so they had to stop that.
Gotcha. So that's where I think you're best off with capital in terms of the physical aspect of it, James, and also if you're looking for the equities, Pan American is my favorite.
All right. Thank you for your question, James. Let's go to another write-in question. This one says, if there's an economic collapse, do you think ownership in silver coins would be a better investment than gold? So, Rich, I'll start with you.
Yeah, I think you need both, clearly. Silver can be very, very bulky and unwieldy. All right, if you have all of your emergency money in silver, it's going to be tough to move around. It'd be great for traction in the wintertime if you're in areas that get snow. Puts them in your trunk on a rear-wheel drive car, but the bottom line is it's very, very bulky. I like it. I like having it for divisibility if you need to break down to small purchases. I like having the gold coins, the 1 ounce gold coins, where the premiums tend to be cheaper than fractional, half ounce, quarter ounce, 10th ounce. I like the 1 ounce gold coins to store dense wealth, okay, that you can move around, and you can always break them down and exchange them. Metals dealers, jewelers are not going to disappear if there's an economic crisis, okay? A lot of people say, well, will it even work? Can you use that metal in the midst of a crisis? I will tell you, I've seen all sorts of signs. I don't know if you guys remember back to the oil embargoes in the 70s. There were gas stations, right, that would put signs out saying that we accept junk silver. And what they would do is they would count it or weigh it, and they would give a store credit for the value of the metal and allow you to buy goods and services, pump gas, whatever the case might be. There's hotels that advertised in the past saying, for X number of junk silver coins, you can stay the night, and you can still buy a gallon of gas for 25 cents, as long as it's pre-65 U.S. coinage.
Yeah, I'll add to that. I mean, we are so fortunate in America in late 20th, early 21st century. We haven't had any kind of serious turmoil of the kind that would require people to use an alternative currency. But if that day ever comes, you want to have some gold coins and you want to have some silver, especially the gold, because everyone kind of knows that that's a real form of currency and not something that's fiat based. So I hope that day never comes, but when it does, I'll be prepared. So, and I recommend.
Jim, could I just?
Yeah.
I want to add something here, though. Even in our present day, right, where we have the dollar is the world's reserve currency still, the almighty dollar. Everything in the world is priced in dollars. And we have weak, friendly neighbors to the north and south. We have oceans left and right. There are still times in this environment where you could tap into that emergency money. I'll give you a couple examples real quick. One, if you look at what happened when Bear Stearns or AIG News came out, the stock market sold off. Guess what? Precious metals sold off too, okay, initially. But they rebounded almost immediately. And the reason for that was people were dipping into the emergency money of gold and silver to meet their financial crisis. Remember back then, a lot of people were using their houses as piggy banks, right? ATM machines, and they were investing it in the market, and the market collapsed. So they had leveraged positions, and they had a meet margin call. They sold their gold and silver, met their margin calls, and then bargain hunters swooped in and started buying cheap gold and silver, okay? So even in this environment, there are examples where people have tapped into that emergency money. I won't name names, but I have a client who he and his mom started buying silver 20 years ago. Mom did it begrudgingly. She didn't understand it. She just believed in her son. So she bought along with him. He ended up having a car accident, triggered a heart condition. The insurance company went ahead and denied the claim because of the pre-existing heart condition, and he had hundreds of thousands of dollars worth of medical bills, and they met it with the silver. I could tell you Mom is a believer today. You don't have to have a full-scale economic collapse to have a personal financial emergency where you could tap into those assets.
Wow. So I want to go back to the special offer and remind everybody to take advantage. I see people are transferring over and taking advantage of this terrific offer, so you should too. It's very generous of Rich and SS Strategies to come up with such a great offer for the Eagles subscribers on those proof gold Eagles and the junk silver $half. So be sure to hit *0 now to transfer over, or give them a call at 800-831-0007. And remember, that comes with a free consultation with Rich, and that alone is worth buying some silver dollars or something, because the knowledge he will have and will be able to help you personally on what you should be investing in is just absolutely priceless. So buy some proof gold Eagles or silver $half by hitting *0 or calling us at 800-831-0007. And we're getting down to the last couple minutes. The last question, another question we had as a write-in, kind of tied into what our last topic was. And the question was, best ways to purchase physical precious metals. And the question is, through the internet? I'll tell you right now, that's not the way to do it. I can answer that one. But what is the best way to purchase physical precious metals, Rich?
I think, especially for the folks in that group that have no precious metals, right? If I'm starting out, the first thing I want to do is I want to buy some gold primarily and some junk silver, and I want to have it delivered to me. Okay, so I buy 1 ounce gold coins. In this case, I'm telling you, you're not going to find better than the offer on the proof gold coins right now, which is mind-boggling, and junk silver, which is the best premium I've seen in 26 years right now. I've seen it as high as 45% premiums for junk silver, summer of 2015. But 2%
and yours is 2%. That's
2%, half of what I consider very good, by the way. So great prices to get in if that's where you are. But I take delivery of it up until the point where I feel like I have enough to cover any short-term financial need before I could tap into other assets, or when I hit the point where I feel like I am no longer comfortable storing it and safeguarding it myself. Let's face it, owning it directly is the cheapest way to store your precious metals until it's lost or stolen. Then it's the most expensive way to hold your precious metals. So once I hit that threshold of comfort and or need, I start branching it out to the professionals, whether it be domestic storage or offshore storage. And we know all of the worthwhile players in the industry and have relationships with the ones that do business properly. 100% insurance at full market value at all time. Things of this nature, redundant security systems, police close at hand, all the things that you want from a partner watching your trusted asset. So I always start there first. I will tell you that a lot of people will say that they don't have the cash to buy precious metals. They're fully invested in real estate or stocks or what have you. I will tell you, right now is probably a time to find some cash. If you're overweight in a position, sell some off. If you get stopped out of a position, maybe you want to put some of that into precious metals at this time. I think now's the time to do it. And if you're looking at your personal funds and you're cash strapped, don't forget, precious metals can be put in your IRA too, and we can help you do that as well. Gold, silver, platinum, and palladium are all allowed since the Taxpayer Relief Act of '97. So we can help you in every way. We know the best trustee administrators out there to help you with that as well.
Yeah, and Rich and Asset Strategies again is a great place to go for that, and again their margins are as low as you'll see anywhere because they want to keep. And Rich talked about somebody for 20 years clients. I know lots of people.
We're working with third generation clients.
Yeah,
Roger,
yeah.
We're working with third generation clients now. I don't want to trade. I want a relationship. We love educated consumers. We love our clients, and we want to keep servicing you and your heirs going forward.
Yep.
So
that's
the long-term business model that matters.
Yep. Yeah, exactly, and that's why Jim and I wanted you on this call and to recommend you to our subscribers because we trust you and we know you can be trusted. And again, a great offer. As he just said on the silver $0.50, he hasn't seen 26 years since a premium's been this low, and so now's the time to do it. The junk silver $0.50 or the proof gold eagles. Hit *0 right now to be transferred over. As we're wrapping up here, you're really not going to miss too much more. We've got about 2 more minutes left. So hit *0 right now or give us a call at 800-831-0007. Again, that's *0. Hit *0 right now or call us at 800-831-0007. Jim, any final words for your subscribers?
Yes. Well, first of all, thanks for everyone for coming. Second, I want to thank Rich, and I think you know why now I was so eager to have Rich to speak with everyone, because not only is his offer incredible, but the knowledge, as you can tell, the knowledge is just, we just scratched the surface of his knowledge on this subject. Just even knowing the different relationships with all these different companies and how they work. That's something that if you're not in the industry that you don't know. And I'm in the investment industry and I don't know it. So that's why it's such a complicated field. There's so many different things to consider. That's why you need a guide like Rich. You need someone who can be in your corner to steer you toward the right purchases and to actually have those purchases available to you. So I hope everyone takes advantage of the offers that Rich has just given, because if you value your wealth protection and you value your portfolio, then you will owe it to yourself to do that.
All right, Rich, any final words?
Yeah, I just want one kind of admin and then just a final parting shot. I could see your listeners are acting. All right, so be patient. We do have a finite sales force. They're all taking your calls. Be patient. Call back. The offer is not going to disappear. We've set aside enough gold proof eagles. We've set aside enough junk silver. Keep trying to be patient. There's a lot of people trying to get in through the same door at the same time. But we'll take care of every one of you, I promise you. Two, just my final thought here. Make no mistake, despite what you hear, the bull market is here. Okay, we have broken out. We are in a bull market. It's not going to go to the moon tomorrow. I see the U.S. dollar as set at some point to pull back. It is due. The stock market will at some point, nothing moves up in a straight line forever, will pull back. These markets tend to go about 10 years, and there is typically significant appreciation. And the GSR, the gold-silver ratio, suggests we have not even begun to see that kind of appreciation. So you've got the advantage of a strong dollar, low precious metals prices relatively, and the lowest premiums I've seen in 26 years. So don't wait for greed to give way to fear. You can start salting away some of those profits now if you're overweighted or if you're stopped out or if you have some funds in your IRA. You can start salting that away in precious metals now. I can tell you I had these conversations at the start of the last bull market with clients. And they love us to death because they had conversations with us early in the bull market. I'd like to have 10 years from now those same conversations with y'all, and it's where you can see for yourself from experience what this kind of market can do for you.
Yeah, well, thank you, Rich and Jim, for spending time with our subscribers today. And I just want to tell everybody that we were on the call right before we went live with everybody, and Rich was telling us about the deal, and Jim and I were like, "What? You got to be kidding me!"
I wasn't going to share that, Roger.
Yeah,
I wasn't going to share that. I thought it was personal, but they both said, "I want some."
Yeah, exactly. That's exactly what I was.
I'm glad that offer is open, like to everyone that calls in, because I was supposed to be first in line, but now I have to go way back. So Rich, Jim and I will be talking to you in a couple of minutes, but I want to thank everybody for being on the call today. Thank you for being a subscriber to Jim Woods, and take advantage of this incredible deal. You can hit *0 right now, or give us a call at 800-831-0007. Again, thanks everyone for being on the call today, and I wish everyone a very profitable day.